If we make a new low, it could just be a third drive. That's the only thing that I could see. 3 drives similar to this, except we go 1, 2, 3. Usually it just comes back to the first of the 3. If it offers something like this, you can see how it dump even more. Like sometimes it can go even higher. I'm gonna do a W. And I wouldn't be surprised if that's what it did if we made that pattern again. I don't think that they would give the same experience. And I think that we're most likely gonna try and end up back at these B points up here. When we ran from this Friday low all the way up to this Tuesday high, that's the 61 that we just responded to. I do think that it's likely to see the 61 again, but ultimately where we are at the 61 is near a 261 and a 188-200. Very similar to yesterday. Because yesterday we had this larger move, and it was right off the 188-200 in there. Then there was also another fib set that we could draw, which gave us a 261, and it was just above the 188-200. Like when I look at, how we reversed yesterday, take a picture of that, then come over to today, paste it. What we have is a 188-200 right here, just like we did here. And then just above it is a 261. Above it is a 260. This was the picture. See, 188 to the 261. You can see that we went past it a little bit too. But this whole setup to allow a 261 to be that high, just a little bit higher than the 188-200. I know they know about this. They definitely know. After a really slow day, we can have a fast morning, and then as soon as we get into, this chop, boatloads of people will be signing off basically. And I think after the chop, we can begin an actual plan. A third drive is trying to push itself out on short term. So with the third drive pattern, it does raise awareness of this level here again, putting a target on the first of the 3 lows. Curious to see how it responds to it, and whether or not it wants to break through it, whether or not it wants to break the short-term downtrend. The irony is all of these gold lines are from today. Where we were responding to is the 188-200. I can make that into a zone. And the interesting part about it as well is if we were to reverse in this general area, currently the 61 will be up near the second B point. Because today, what we have already, the only thing we're missing is the 61% retracement. Don't mind if we go through it. But the yellow line did indeed break to the blue. The 3 drives pattern is effective to this point. 5-wave move that also has a 3 drives pattern. This happens because it is very likely that we end up going to that 61. First of all, it gets all the B points. Like getting past the 61 is what it did before, okay? So I can see this very strangely. When it made, I'll go over it again because it's kind of a foreign thing, but we go down, we did some sort of chop at the beginning there too, which is normal. We did that today as well. We came down, right? It was a 188 off of this level, 261 off of this level. So that's there. We did that, okay? And then we came all the way up and hit the 61, but then started this chop past it where it just got annihilated back to the 61. Now, it made another 61 here and then broke the high. Ironically, the whole thing that it did do after that point, we can remember this, is it came down to hit a 61. I know it seems kind of crazy, but it actually did. This is the 61, by the way. The red yellow line's all the way at the top though too. So it's another day where they made it clear that whatever support break that they were going to make ultimately is going to target the red yellow line. Like we're at this target. Now, most important trend is the red yellow line. If we do make a 61 pullback, it would be a right shoulder, but and what would that look like? This pullback right here, exactly the same. It would be a 61. Not saying short it, like the long trade is more important, but that would get us to the 61. Like this is the 61 here. And I'm going to mark it in as well because I want it to be a forgotten 61. Like, I do want it to be a Forgotten 61. So this one right here, it is the level where if we were to go to it, it would be the same as Friday. But I don't think it's worth selling any long trades over. Like, the exposure to the break of the yellow line could be very large. Like, whether or not we do this movement, it shouldn't prevent anyone from being in for targets up here. The 188 would be up here. I don't know. That's a little bit far ahead, but I'm gonna mark it in there just as a red zone. That's really hard to see. I want to remember that level, just out of curiosity. Just out of curiosity, because I know who's planning ahead. The people that can make the decisions. Everybody else is just trying to guess. But these are levels that could be part of their plan. So if we understand enough of them, don't be surprised if we understand their plan. And right now, all it took was being exposed off those green zones to the B points. Anything that you have left, as long as you can handle a 61% retracement, and you've taken off enough profit to pay yourself, then you're looking pretty good. Like, the thing is, remember yesterday, the movement went through this entire sequence, made the right shoulder, made the 61, ran up, and then blasted, but then we had a huge pullback. That's the thing that we might not need to do. We might not need to do that anymore. This run could continue. If we do this whole setup again, that was the setup that they set up to get the trend to break. And it broke, but we didn't continue with it. But if they go through the entire setup again, I could see them going through with it and actually letting it run. You know, because they're going through every single component relatively similarly. I got a lot of respect for that.